Now tonight, we will mainly talk about Bitcoin. This asset is up by quite a significant margin, not just since the start of the new year, but in the past 365 days as well. We'll talk about why this is happening. Then the biggest question that you will be asking, is it too late to invest in this asset or not? If it is not too late, then how am I as an investor supposed to allocate into a volatile asset like Bitcoin? So we will address these questions first. Then after that, we will move on over to the Malaysian market. Because Bitcoin is not the only asset that has performed well since the start of the new year. And finally, we will settle on the most recent MOU signed between Johor and Singapore. As usual, not financial or legal advice. So let's dive right in. This is Bitcoin's daily chart over here. Obviously not the most updated chart. Bitcoin has since retraced quite a bit, but instantly you'll be able to see how well Bitcoin has performed since the start of 2023. Up a whopping 180%, vastly outperforming other asset classes. To give you some context, the S&P is up by 20-30% within the same time frame, and it is considered very good already by the S&P standard itself. Normally the S&P gets about 8-12% return every year on average. Meanwhile, the Malaysian market, we'll talk about the Malaysian market a bit later, but it's not too exciting, up maybe 2 or 3% only. Gold, meanwhile, is up 10-12%, which by gold standard is already considered quite a good performance. But Bitcoin, 180%, if you invested 1,000 ringgit over here, big if, right now that 1,000 ringgit will be 2,800 ringgit. And the start of 2024 itself also has been quite good for Bitcoin. In the past 2 weeks, Bitcoin went as high as $49,000, hitting a 2-year high. Before we're tracing back, later I'll show you guys a few more charts, but it's up 10% since the start of the new year. And why is this the case? Well, this is the SEC, the US Securities and Exchange Commission, similar to the SC of Malaysia, the Securities Commission Malaysia, securities regulator basically. They've recently approved Bitcoin spot ETFs. And this is huge for the crypto industry. It basically opened the floodgate for new retail and institutional investors to come in. Okay, so spot ETFs, they work very differently compared to future ETFs. Future ETFs, they track like what it says, the future price or forward price of Bitcoin. But meanwhile, spot ETFs, they track the live price of Bitcoin. And if a financial institution wants to create a Bitcoin spot ETF, they actually have to acquire the asset when investors invest into the ETF itself. Okay, so it removes the hassle of owning or managing the asset. Let's say you are a wealthy investor. You don't have the time to open a Luno account, then figure out how to deposit your Malaysian ringgit in, then open a Binance account, then P2P. You don't have the time for all of these steps, right? You can just directly invest in an ETF. It's pretty much the same as investing in Bitcoin, except there is a manager or a trustee to handle your assets with a small fee. So this type of ETF has been discussed for over a decade. And within the recent 1 or 2 years, there have been legal battles, a lot of wars going on between major financial institutions and the SEC. And finally, these financial institutions, they won. BlackRock, Fidelity, as well as Grayscale, they immediately opened up all of the ETFs that they applied from the SEC. As you can see, 11 ETFs opened on Thursday and began trading in the US. And on the first day itself, you can see 4.6 billion in volume, obviously very big for Bitcoin itself, which is why you see Bitcoin, the mania has come in, a lot of people increased demand, and Bitcoin rallied easily to a 2-year high of $49,000. Now this is the hourly chart of Bitcoin, the most updated one, and this asset is just very volatile. So if you are planning to trade this asset and you don't have any previous experience of trading and you're looking to get into margin or leverage, then maybe it's not really a good option, because at these key events, right, Bitcoin can have 10-20% swings. If you're not really careful with your risk management, that is a one-way trip to blow up your entire portfolio, which is why it's better to consider the longer alternative or become an investor. So the rocky state of Bitcoin over here, what we are seeing, well, first of all, on the 8th of January, Gary Gensler, the chairman of the SEC, first of all, he hinted that the spot ETFs will be approved. Then after that, the SEC accidentally leaked out a tweet saying that ETFs have been approved. Then Gary Gensler said, nope, ETFs not approved yet. Then Bitcoin fell 10% all the way down to $44,500. Then rallied again when the SEC officially approved the asset. And right now what we are seeing most recently is the ETF mania becoming a sell the news route. Because during the last quarter of 2023 itself, many investors, financial institutions, they are super confident that the SEC is likely to approve a Bitcoin ETF early this year. So this ETF, it has already been priced in the market quite a few months ago. And more recently, when it officially get approved, there is some mania over here. Many traders went long, went leverage, went on margin, and you just need a slight dip in price to cause a huge crash like this. Which is why, if you're not experienced in trading and if you don't have proper risk management, don't try and time the market. Okay, so the big question over here, is it too late to invest in Bitcoin? Well, it's not too late, because at the end of the day, you don't take a look at Bitcoin's price. You don't care where Bitcoin is currently right now. You care about where your portfolio is right now. Okay, so portfolio managers, they generally don't recommend an exposure of more than 15%. Because Bitcoin itself is already a very volatile asset. If you have an exposure of more than 15%, some people go 30, some people go 50%. If Bitcoin underperforms this year, then you'll definitely cry. Okay? For low risk investors, a 1 to 3% exposure is more than enough. It will not only maximize the overall return of your portfolio, it will also reduce your total risk. So it's a bit counterintuitive over here. Investing a small portion into a volatile asset can actually reduce the total risk of your portfolio. But what if you're a high-risk investor? What if you have a longer time frame, you are planning to invest for retirement in the next 20 to 30 years? Well then, portfolio managers, they recommend high single digits, 9 to 10% is more than good enough. So right now, if you take a look at your portfolio and you say that, oh, I currently have 0% exposure in Bitcoin itself, and I am a low-risk investor. So considering your total portfolio value, let's say it's about 10,000 ringgit, then 1 to 3%, your maximum allocation in Bitcoin should be up to 300 ringgit. And the next few weeks, if Bitcoin were to underperform, then the weightage of Bitcoin within your portfolio will decrease, hence encouraging you to further invest more or quote-unquote buy the dip. Okay? But let's say what if you've invested in Bitcoin for quite some time. You've held through the bear market and you've consistently dollar cost average. Now you're wondering, when is the best time to take profits? And this question, I posted to Han Liu, founder of Ringgit Plus, ex-investment banker, more than qualified to answer this question. He said that, there is no hard and fast rule, but generally there are 3 methods that you can use to rebalance your portfolio. But all of these 3 methods, they require you to fix a specific percentage within each asset in your portfolio. So let's say you are a 60-30-10 type of investor. 60% stocks, 30% fixed income, 10% crypto. This is the percentage that you fix. And the first method, you periodically take profits or rebalance monthly or quarterly. So meaning March itself, you take a look at your overall portfolio, see which one is out of balance. If crypto rally, have a significant weightage in your portfolio, more than 10%, then you take this quarter itself to rebalance. Otherwise, you look at your portfolio again in the next quarter. It avoids overtrading, done in line with your DCA or your salary timing. The second method, this one is most commonly used by a lot of portfolio managers out there. It is when your allocations go significantly above your target allocation by a fixed percentage amount of your portfolio. So let me break it down for you. Let's say 60-30-10 again. Okay, and you set a 5% deviation within your portfolio, meaning that you can accept crypto rallying up to 15% within your portfolio, even if your target allocation is 10%. So in this case, when Bitcoin rallying from all the way from 16,500 to $49,000, obviously the exposure of BTC within your portfolio will significantly increase. And if it exceeds your deviation target of 5%, then it's a good signal for you to take profits already. So let's say right now, 16% of BTC within your portfolio, but your target allocation is 10%. and it's a signal for you to take profits on the 6%, or you can allocate your monthly DCA into either of the other two assets. It's either in equities or fixed income, whichever that has the less dominance. So the third method is when allocations go significantly above your target allocation. Also relates a bit to the second method. But all in all, these three methods, if you notice, they don't care about the current price of Bitcoin at all. It avoids you to, it prevents you actually from timing the market and figuring out whether you are too late to invest in this asset or not. And at the end of the day, the answer is no, right? So take a look at what your portfolio requires, then allocate accordingly, see where the months go. Bitcoin will definitely fluctuate, the assets within your portfolio will definitely fluctuate, and then rebalance based on either one of these three methods. Okay, so hopefully you get a good idea as to how you want to position yourself in this asset. Now let's move on over to the Malaysian market. So Bitcoin is not the only asset that has performed well this year. Malaysian market FBM KLCI up 2.21%, including this retracement. If we exclude the retracement, right, the Malaysian market is up almost 3% in the past 2 weeks itself. And the rally is led by major banking stocks. Okay, this is the fourth consecutive week of net buying from foreign investors. So foreign interest has returned. This is because the US Federal Reserve has said that rate hikes are definitely over. We may look to reduce interest rates this year. Hence, a lot of investors, they are looking to risk on their assets or invest in emerging markets like Malaysia. So a total net inflow volume of 525 million for the first week of January. Every trading day was a net foreign inflow. There are outflows as well, but the sectors that recorded the highest foreign inflows were utilities, financial services, and property. Meanwhile, sectors that recorded the highest outflows: technology, consumer products and services, and finally telecommunication and media. So when we take a look at the top 4 companies within Malaysia itself, it has also been up by quite a significant margin since the new year. Maybank from 8.89 rallied all the way to 9.07. Public Bank 4.24 rallied to 4.34. Quite a bit, but you can see it has been steadily going up in the past few months. CIMB, this one is quite impressive. CIMB previously rallied to 6.04, a 5 to 6 year high, and most recently retraced back down to 5.9. Tenaga Nasional previously struggled to break the 10 ringgit resistance over here for quite a few months. Then because of the recent foreign buying interest, Tenaga broke free of its 10 ringgit resistance and rallied all the way to 10.50. So if you're interested to invest in Malaysian stocks, you want to play a bit in Malaysian banking stocks and explore a bit of Hong Kong or US stocks, you can try out Rakuten Trade. I've been using it for close to 4 months right now. And by the way, clear disclaimer, they don't pay me for advertising their brand. This is just my personal view on this. I've been using it for close to 4 months. The experience has been quite a blast so far because first of all, when you register for this exchange, it's entirely online. You don't have to fill in any difficult forms compared to a traditional broker, which can take up to 2 to 3 weeks if you want to register. Okay, so registration process for me in Rakuten Trade take only about 1 day, I think. Then if you deposit money in, the funds can be used instantly. Compared to regular brokerages, sometimes you got to wait up to 1 day. And the trading fees, it's not the lowest, but it's pretty reasonable. And I guess the selling point about Rakuten Trade is you can trade Hong Kong and US stocks as well. So Apple, Amazon, Facebook, take your pick. And this is the main way on how I gain exposure to the US market through index funds. So just to make it clear, I don't stock pick in the US. I mainly invest in US index funds that track the S&P, Dow Jones or Nasdaq. These include funds like VTI, VOO, QQQ. Later during the Q&A session, if you guys are confused, you can ask me more about it. Anyway, if you are interested to sign up for Rakuten Trade, I will send you guys a referral code that you can use later. Get yourself some trading discounts. Alright. So on to the last topic of the night. Malaysians, Singaporeans, we may no longer need to use our passports to travel to each other's countries. This is big. On Thursday itself, the Economy Minister Rafizi Ramli signed an MOU, both of them signed, this is a Singapore Trade Minister, to create a special economic zone in Johor and Singapore. So this is witnessed by PM Lee and PM Anwar, and they are trying to strengthen the ties between two nations, improve cross-border trade, as well as explore new initiatives. One of the new initiatives that is being explored is the usage of QR codes for traveling instead of passports. So we no longer need to queue up for the custom, fill in all this form, that form. In the next few years, we may just need to use a QR code, and then we can directly go through the custom gate itself. So this is not the only thing that is being discussed. You take a look at this boomer selfie over here. Before the ceremony itself, before the signing of the MOU, PM Anwar and PM Lee actually met to oversee the construction of the RTS link. So this one is in Johor, and it is a new LRT station that connects Johor and Singapore. And MRT is now 65%, correction over here. LRT is now 65% complete, expected to finish by 2026. So a few interesting facts about this, I think it's pretty important because we may no longer need, if you live in KL, we may no longer need to take a direct bus from KL to Singapore. We can take a bus from KL all the way to Bukit Chaga station in Johor. Then from Johor itself, you can take the LRT all the way to Woodlands in Singapore. So the LRT length itself, the total length spans about 4 km, 3.6 minute wait time for each train, and each train can carry about 10,000 passengers, estimated to carry 40,000 people per day. So it's quite impressive, may finally resolve the issue of traffic in the causeway, and I think if you're currently living in Johor, you will be quite excited about this. Okay, so that brings me to the end of my short and sweet presentation tonight. Let me just do a quick shout out to all our current members. Thank you all so much for your support. Andrew, Wendy, Edward, Alex, CC Is, Urshad, Caveman Balls, Calvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Lukman, Lufani, and Will, as well as all of our learner members. Thank you once again for all your support. Anyway, let me address your questions. Is Rakuten Trade iSpeed.my app? I don't think so. Rakuten Trade, I don't think they have an app yet. I may be mistaken over here. So far, you can only access it through the web itself. Okay, and the registration process is pretty straightforward. There's no complicated forms to fill. It took me 1 day to get approved, and your funds will be reflected instantly within your account. Next is, what is your view on 2024? So 2024 itself is looking to be quite a decent year. From what I've heard from this from them, from their sharing itself. Later I will share you guys this link as well. First of all, because over at the US side, the Federal Reserve is pretty much done hiking interest rates, and they are looking to, in fact, reduce interest rates. And that will actually drive up the global markets, as well as especially the emerging markets, because that's when investors start to risk on their assets and explore assets that have more risk, basically. So how will 2024 be for the US market? Right over here, okay? Kept interest rates steady, final meeting of 2023, looking to reduce them earlier than expected next year. Result was a massive jump in the markets, okay? Still a massive jump in the markets, like what I showed you just now in the FPM KLCI. The US market is also up by quite a significant margin. But as investors, you must remain cautious. Two wars in Ukraine and the Middle East still ongoing. So make sure you have proper risk management. Okay, so the important point about this is, if let's say you set a specific portfolio for yourself, right? Your plan is 70% equities, 30% fixed income, and maybe 70% equities, 25% fixed income, 5% crypto, whatever your percentage is. Make sure you stick to it, make sure you allocate accordingly, don't get greedy, don't go overboard, even though you believe that this year will be a fantastic year for the S&P. Okay, because if you go all in, then you will definitely regret if the market underperforms. So outlook-wise, it's looking to be quite a good year, but make sure you manage your risk accordingly. Okay? Can we use Rakuten Trade for Bitcoin ETF? Not that I know of, but I do think that since the ETF has been approved in the US, Rakuten may look to add the ETF in its exchange itself, but subject to approval by the SC and so on and so forth. So far, I think the answer is no. And for Bitcoin ETF, the closest one that you can have is Halogen Capital. Okay, so this one is managed by certified financial planners, ex-investment bankers. It's actually one of my advisors. He's the founder of this new startup itself. It's one of the first licensed fund manager in Malaysia that specializes in digital assets. But they have like a minimum investment requirement of 10,000 ringgit. Okay, so if you're looking to invest in Bitcoin but you don't want a hassle of maintaining it, then you can actually take a look at Halogen Capital. Have you tried using eToro for investing in index funds like S&P 500? Would you prefer Rakuten over this? Yeah, eToro has been here since forever. And no, I haven't tried using eToro to invest in index funds. I don't know how the fee structure is like. But I used eToro during my early stages of investing in crypto. And it wasn't a good experience because the fees are very high. And transferring crypto out from eToro itself was a nightmare. Apparently you can't do that. Or if you want to do it, it takes a lot of work. So if you are currently using eToro, make sure you compare the fees. Okay, because apart from the platform's usability itself, which is also important, you want to make sure that the fees is much lower compared to eToro. If it's roughly the same, compared to Rakuten. If it's roughly the same, then Rakuten takes the cake for this. Because Rakuten is much more simpler and they offer a wide range of products, including Hong Kong stocks as well. So do go and check it out, guys. And that brings me to the end of my session tonight. If there are no more questions for me, hopefully you guys enjoyed it. I'll see you guys in the next one. Bye. Stay safe.